Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income. My name is Matt, and in today's video we're going to go over the trades we executed for July 17th. I'm going to be talking about my covered calls, my cash secured puts, and all the different considerations taken to run these simple and straightforward options. We're going to then take a step back, take a look at the last 66 trading days and see how my performance has played out. And then lastly, I'm going to talk about what I plan on doing for tomorrow, July 18th, with regards to the market. So let's get started. The first thing I like to talk about on my channel is my account value. And that's more so just so that you guys understand how much money I'm dealing with to make this daily income. I have $170,342.59. As you guys can see, for my options, I have a couple of week-long cash secured puts and covered calls for Oracle. Those usually expire weekly. I usually like to run dailies, but this week I wanted to do something different. I decided to choose a couple of different underlyings. One was Amazon, one was Oracle. So this is kind of how it played out. So let's head over to the spreadsheet and talk about what I did for today. Looking at the spreadsheet, I ran 2 covered calls and 2 cash secured puts. Going into July 17th, I had 200 shares of the QQQ, so I ran covered calls against those. So the first thing I did is the market opened at the 558.56, and I chose a strike price of the 559 and the 558 for both of my covered calls. And the reason why I chose strike prices that were pretty much at the money is because I wanted to prioritize premium today. I wasn't really looking for appreciation gain, but that was definitely the wrong look because the market shot up a little bit. I think at the end of the trading day, QQQ closed at the 561, almost the 562. So I could have captured a little bit more appreciation, but I just wanted to get premium. So that's the trade-off I took. I took the premium up front versus the potential of the appreciation. At the end of the day, for the 559 strike price, I made $77. For the 558, I made $118. Then taking a look at our cash secured put on the QQQ, I chose a strike price of the 557 because the market looked relatively strong and I didn't think it would regress this much. So I chose a delta of like 0.33, which means there's like a 33% chance of this option executing. That was the right move, made $78 and expired worthless at the end of the trading day. And then the last thing I did is I did a cash secured put on Amazon or AMZN. Chose a strike price of the 217.50 when the market was at the 223.71. End of the trading day closed at the 223.99. And this is still active, but just wanted to bag in an extra $15. I still had a little bit of buying power available and just wanted to, squeeze out more premium. The end of the trading day made $288 of premium income. So I think that is a solid day for me. So let's head over to the other side of the spreadsheet and take a look at the last 66 days and how I've been doing. Now that we are at the other side of the spreadsheet, let's take a look at the key points here. So for July 17th, as we mentioned, made $288 of premium, and then that brings our account value to that $170,000. We hit a freaking great milestone, hitting that $170,000. So I was pretty stoked about that. Since I started trading April 11th, basically 66 trading days, I've made $20,640. And if we look at that as a percentage, that's about 16.43%. So we are blazing after only 3 months of trading. I'm pretty happy with just how that performed thus far. And if that's only 3 months, now multiply that with the 6 months remaining, we're going to be ending 2025 on a pretty good year, if you ask me. My trade win percentage, I'm winning 98.48% of my trades. Won 65 days, only lost 1 day, and I won't dive into the details there, but it's just a scarlet letter in my mind that I will never forget. Just didn't realize how to roll an option properly, and I had to pay the price for it. But 66 total trading days to only lose 1, I think that's not too bad. You have to pay the toll of pain sometimes. The average premium I'm making per day based off of my account's performance over the last 66 days is $312.73. If we look at that as a weekly average, that's about $1,474. And then as a monthly, this isn't really going to change until the end of July, but it's at that $5,651.88. Now for the interesting part, guys, is these estimates. So these estimates are based off of my trading performance. And even though I've only traded for about 66 days, I've expanded out these numbers for about a 12-month period. So for this average yearly premium, I took the average weekly premium, multiplied it by 52 because there's 52 weeks in a year. And that's how I came up with $76,663. And if you look at that as an average yearly percentage, that's about 52%. So yes, we can say that we're in a bull market. I will definitely point out the elephant in the room. Yes, we are coming off of a big bull market after the whole April 2nd liberation tariff day thing. So I have been riding a pretty good high since that time. However, I still think even if the IV isn't going to be as high moving forward, I still think this is going to be a very profitable way of trading. In this section here, we have about 24 weeks left in 2025. Based off of my account's performance, I should make an additional $35,000. But idealistically, I would like to make about $1,000 a week at a conservative level. So I would make an additional $24,000 on top of the $20,000 I've already made. So I'm pretty excited to see if that's which number I'm going to hit. Is it going to be closer to, that $24,000, that $1,000 a week, or is it going to be that $35,000? I'm definitely thinking based off how we've been performing, I think I'm going to be optimistic. I'm going to say we're going to hit this 35,000. This estimated goal was when I had a smaller account size of 86,000, but we are blowing past that. Total gain in 2025 is $20,000. We still have 9,000 to go to meet that goal. I didn't really want to revise it. I just kind of came up and I adjusted the goalpost to say I'm looking for about $8,000 a week. That would be a very good number if you were to ask me. So why are we doing this in the first place? Nobody just wants to invest and not know what their potential return can look like. So I decided to come up with my own type of calculator. And the way this is going to work is every year that goes by, I'm going to sell lock the data into the cell. So at the end of 2025, whatever the numbers look like, I'm going to sell lock them. And all of these numbers, the estimated income, the end of year value, that's all going to be coming based off of my trading performance. If the trading performance goes terrible, all of these numbers are going to begin reflecting the terrible numbers. If these numbers continue to get the same or better, then that's also going to reflect. So these numbers are always going to change, and there's never going to be a point where they're the same number. So for the end of 2025, the estimated income I'm going to make is about $56,000. So basically that 20,640 plus that 35,000, that will be that 56,000. And then for the tax, I'm a high income earner, so my tax bracket is going to be 35%. So Uncle Sam's going to rob me again. I'm risking my capital, and they're going to take my money. Cool. But it's going to be about $19,000. It's a good problem to have, especially if you're in abundance. So I can't really complain. Once we take the estimated income minus the taxes into the account value where it's at right now, I should have about $86,123 by the end of the year. And then we also have to talk about taxes. I'm probably going to keep all of my money in the account until about March of 2026 before I start pulling anything out for taxes. One, I want to know how much I need to pay for taxes. And then number two, the longer I keep the money in the account, I'm able to produce more income. So therefore, I have more money so that I can make more money. Simple enough, right? And then ideally, I'm looking to see what the account's going to look like in about 2030. I don't mind working my job, but I think it'd be very cool to not have to work, especially if I'm making about $314,000 a year in estimated income. If that's ever going to happen, we will see, but I'm always an optimist and a man can dream, as I always say. But in 2030, if everything stays exactly the same, we don't have any major corrections, the market stays relatively strong for the next couple of years, I should be making about $314,000 a year. Uncle Sam's going to rob me again, about $110,000 of taxes I'm going to have to pay. But at the end of the year value, my account's going to be $805,000. So I would not complain at all about that. And then ideally, anything after that is gravy. But kind of what I said in my previous videos, even if by 2030, I'm making half of this estimated income, making like $160,000 a year, even if it's a third, even if it's a fourth, that's still a significant amount of money that I can generate a premium. And then maybe I might not retire sooner, but then I might be able to use that money to then enhance my life. I can help pay a mortgage, groceries, bills, things like that. So it's definitely something to look forward to, even if, the numbers might not exactly match at this time. But in the dream scenario, if I continue working until 2058, I theoretically should be making about $1.1 billion a year. I always laugh at this number because I think that would be fantastic. I never thought in my life I'd be a billionaire. Not there yet, but hey, it's cool to think about it. And then the account would be at that 2.9 billion. Even if it's 1/10 of this at that time, even 1/50th, that's still a massive win in my book. But yeah, guys, let's take a look at the weekly values. So for the week we are currently in, we have already hit $1,471. That is freaking phenomenal. We already surpassed last week's values, and we still have one more trading day. And once we get in the Robinhood, I'll start talking about what I plan on doing. But moving forward to the monthly tracker for July, we're already at $3,684.52. We are past that halfway point in July. So I just theoretically double this, and that's what the monthly number should be. And then lastly, the yearly tracker, we're already at $20,640. This is going to be, this data is going to fill up real slow over the years, but I think it would be cool to track, especially if I'm still continuing to post daily and monitor these trades. But yeah, guys, after 66 trading days, I am freaking stoked to see how well this options trading has been going. It's unbelievable how 20 minutes in the morning can generate you, thousands of dollars a week or $100 a day, which is mind-boggling. And I would say the one biggest barrier to entry for running this type of an account is having enough money to buy 100 shares of a specific stock, and then just staying consistent and then coming up with the right strategy and sticking with it. So thus far, I absolutely love this. I'm going to continue doing this on the QQQ, the SPY, whichever underlyings I think are going to be hot at the time. I might throw a few in here and there just so I can capture some more premium. So we will see how everything plays out. But yeah, guys, super stoked with how this has performed thus far. All right, guys, now that we are back to Robinhood, let's go over some of the trades I'm going to do. As you guys can see under my stock section, I still have my 200 shares of the QQQ. Those are going to be assigned away whenever the market officially closes. Should be about 1 hour from now, which is 8 o'clock Pacific Standard. So one more hour at 9 p.m. that will happen. It's going to be different on the East Coast. I think East Coast, it's midnight. But with that being said, let's head over to QQQ and just kind of debate the idea of what we're going to do for tomorrow. So because I am losing 200 shares of QQQ, I might consider running at the money cash secured put so I can purchase more shares of QQQ. But at the same time, there was a quick pop in the market. And usually after a quick pop like that, there is a little bit of a pullback. But I'm going to be honest, the market's really strong right now. So the idea that I might get something on discount, let's forget about it. But what we're looking at now, this buy call, I'm going to beat the dead horse. Sorry for all of my returning subscribers and viewers. This buy call, I don't ever do this. 90 to 95% of investors that run these type of options are going to lose money. So I'd rather just do the safe stuff. I can't complain about 50% return a year, guys. If you're envisioning trying to get more than that, you need to reevaluate your trading strategy. I'm not saying you can't do it, right? There's plenty of guys that are super smart out there, but you need to take time to understand the market, how specific stocks move, how some of these underlyings move during earnings. And you have to take all these things into consideration. And just to be safe, even if the thing about this analysis with the stock market, everything is just a guess. Everybody's guessing that earnings are going to be good or earnings are going to be bad. And everything is just a guess and an educated guess, but nobody knows for certain what's going to happen. So that being said, don't ever do the buy call. Just do sell call, which is covered calls, or sell put, which is what I'm going to do because I don't own any shares. So let's take a look at what some of the puts are going to look like. So QQQ is trading at this 562.49. And ideally, I like to look a couple of dollars away from the at the money price. At the money price is the current share price. So I usually look at $5 away. So let's look at what the 557 delta is. That's a 0.14, and the money is about $33. Guys, I don't think, putting, $55,000 of collateral is worth $33. I definitely want something a little bit more. And this delta of 0.14 means there's a 14% chance of this executing. I am probably going to side on choosing a higher strike price just so that when these shares do get assigned to me, I will get more premium. And that's kind of what I'm going for. I want the shares and I want the premium. So this 560 doesn't look too bad. 0.322, so a 32% chance of it executing. I probably might run one at this 560. This 561 seems a little high, but I don't know. But this $116 looks real nice. So it's just that debate between, hey, do you want a better price or do you want more premium? That's kind of the fair trade-off with all these options, right? You can, for covered calls, if you want more appreciation, you're going to get less premium. If you want more premium, you're going to get less. It's vice versa. It's just like that lever that's forever changing. It is more premium, less appreciation, and vice versa. That's how it works. So for tomorrow, definitely, I think for certain, I'll do this 560. Well, I hate saying for certain. I'll be looking at this 560, depends on what the market moves. If the market just starts shooting down, I might adjust my strategy to choose a better price. But if the market stays exactly where it's at right now at this 562, I'll hit one at this 560. And then I hate to use emotion, but we'll see how I feel in the morning. I think maybe this 561 would be a good cash secured put with this $116 premium. At the same time, I just might run two at this 560. And then I think that's all I'll have enough buying power for. I'll have cash, but the way that event contracts works in Robinhood's a little bit different. So I should have about $120,000, which should be enough to run two cash secured puts on QQQ. I could just go ahead and buy 100 shares, and then run a covered call, but I don't know if I really want to do that. Maybe let's take a look at what the covered call premium would look like. Say if I bought in at the money, it'd be about $100. We'll see. But yeah, for now, I think I'm going to target those two cash secured puts for QQQ, and then whatever else the market gives me or any opportunity presents itself, then I'll go from there. But yeah, guys, that wraps up the video. Matt out. Stay locked in, stay disciplined, stay harvesting, and I will see you at the next one.